All right. Distinguished ladies and gentlemen, good morning to you all. And thank you very much for taking time to join us for PFM Tax Africa Network dialogue on reviewing 20 years of the value-added tax in Ghana. And we're going to certainly explore the upsides, the downsides, and the spaces that allow for improvement as we go on. Tax doesn't sound like fun to anyone, but it's an important part of every nation's development. And when in 1993, thereabout, the idea was mooted, it received its fair share of pushback. I remember as a young A-level student, I got caught up in the Kumipreku demonstration, which at the time was meant to demonstrate the disapproval of a section of the Ghanaian public over the introduction of the VAT. In my layman's mind at the time, the VAT represented something that was not good. You fast forward 20 years, there's some great things that have happened to our economy because of VAT, and then there's also some gaps, and that's essentially why we're gathered here this morning. Without wasting any more time, I'd like to call on Northern Akwahefo to deliver a short opening remark, after which we'll go into a series of presentations, and then we'll dialogue after our third presentation. So for those who are joining us on our social media handles, we're on the My Joy Online, streaming on My Joy Online. We're also on the Joy FM Facebook page and on YouTube. If you have just joined us, you're welcome to the PFM Tax Africa Network dialogue on the VAT. 20 years of VAT, the good, the bad, and the ugly. Ladies and gentlemen, I give you Northern Akwahefo.
Thank you very much, Inshirado. All protocols observed. Ladies and gentlemen, the PFM Dialogue series is an initiative by PFM Tax Africa Network to promote relevant conversations about public finance management in Ghana. This being the second of many to come, let me say the series has been put together to encourage and facilitate apolitical discussions on fiscal policies, revenue mobilization, resource exploitation, and management, together looking at national expenditure, among others. Ladies and gentlemen, it is important at this point to remind you that the dialogue series will be an extension of PFM Tax Africa's PFM Academy, yet to be launched, but will be opened to as many members of the public as possible, usually using video conferencing as a means of reaching wider audience. Our vision is for PFM Tax Africa to hold these series every quarter, each dialogue focusing on a pertinent issue of relevance to the management of the Ghanaian economy and the management of the country's resources, especially within the fiscal space. The topic of VAT has dominated discussions looking at the recent taxation issues that have come up, with some having issues on how the calculations are done by the revenue regulator, which is the Ghana Revenue Authority. It is for this reason that today's topic was birthed: 20 years of VAT, the good, the bad, and the ugly. Today's program will have as our media partners, Multimedia Group. And of course, if you look at the Multimedia Group, we are looking at the Joy Cluster, which is Joy FM, Joy News, Joy Business, and My Joy Online. But just to take us back a little bit, ladies and gentlemen, VAT was originally a French idea started in the 1950s. Britain introduced it as part of its condition of joining the European Economic Community as well. In our part of the world, VAT was first introduced in Ghana in 1995. It was meant to replace both sales and service taxes, which tax policy analysts said created an inflationary pressure on prices. But the 1995 implementation failed after a short implementation period of just 2 months. Several reasons, including lack of public education and political pressure, played a role in the withdrawal of this particular tax. I'm sure many of us can remember or would be able to remember the famous demonstration that was held in this country at the time, which was the Kumipreko demonstration, and that had our current president, Nana Addo Dankwa Akufo-Addo, as one of its leaders, and my very good friend, Kwesi Pratt Jr., who was also one of the leaders for that demonstration at the time. Ladies and gentlemen, after its first attempt, they were able to introduce it, and legislators prioritized inclusion and public education as one of the ways that should lead in the implementation. Indeed, the law section on commencement laid out details in terms of, if you look at the provisions, which demanded that the Minister of Finance announce and made sure that it was gazetted and the media was used in telling the people what needed to be done. And that also led to the successful implementation of it. After implementing the tax today, after 20 years, we have gathered here, both in this room and those of us online, to do some interception, gathering some fine minds, including the very gentleman who was the first coordinator for the VAT. He later became a deputy finance minister and also a substantive finance minister for this country, and that is Mr. Setekpe, who is one of our speakers for today. We also have a very known face who is not only a consultant in the tax space, but is a lawyer. Dr. Abdullahi Ali Nachia is also going to be speaking to us. And then we have a tax lecturer and a consultant who is with UPSA, Mr. John Amu, who will also be speaking to us. I do hope and know that they will do justice to the topic, which is 20 years of VAT, the good, the bad, and the ugly, and will help us with some recommendations on how to ensure that the VAT will be used to raise enough revenues for national development. Having said this, I wish to welcome those of us here in the room and our friends online listening and watching us via the social media handles that we have, and we hope that we will have a fruitful discussion. Before I take my seat, I want to acknowledge the following people who have also joined us. And if you talk of tax, of course, the regulator needs to be in the room so that they hear what the experts have to tell us. We are privileged to have the Deputy Commissioner in charge of Strategy, Research, Policy Programs at the Ghana Revenue Authority, that is Dr. Charles Adai. He is with us in the room. Also, we have the West African Regional Manager, Anglophone, that is for the Natural Resource Governance Institute, that is Nafi Chenery, is with us. In this room also is someone from the World Bank, that is the lead public sector specialist, that's Farkan Ahmed Salim, is with us. And we have Benjamin Boache, we know him, that is ASEP, the executive director. And I have seen my good friend also working, that is Imani, executive director. He's also just joined us in the room. I see the man in charge of policy when it comes to tax areas, also at the Ministry of Finance. That is my good friend. He has also, but we would introduce them in due course. Ladies and gentlemen, let me say you are all welcome. We hope to have a fruitful discussion. Thank you very much.
So we're going to go into 3 presentations after we can have a dialogue and get your questions and contributions. And starting us off, as Norman rightly said, the very first coordinator of the value-added tax as far back as the mid-1990s. So I'm not entirely surprised that it's something that is still pulling at the heartstrings of the man who rose through the ranks and served the nation in his capacity as finance minister. I do recall that during the turbulent times of 2014, thereabout, there were interesting tax measures that were put in place, and the refrain was that, well, the guy is, is a tax guy, so he will do tax. But today we get to learn 20 years of what VAT has represented for us as a country, its contribution, the gaps that need to be filled, and what you and I ought to do to ensure that overall the current largest base of our tax revenue will continue to thrive and we all benefit. With that, let's welcome Mr. Setekwe.
Let me welcome everybody here on behalf of PFM Tax, Africa, and to GRA, particularly for their, presence here. We have some people from the academia, apart from the presenters who are UPSA and Legon. We also have Dr. Bopin, who is also here with us. So if I may just acknowledge that. We acknowledge everybody else who has been introduced. So I have a very limited time. So I'll run through some of the slides. I'll take a bit of time, with some of them, particularly the initial ones. What I'll do is, is to go through the mechanics of VAT, hopefully in a very simple manner. VAT, the tax is on top of value addition. So what do we mean by value addition? That's going to be my focus. The people who, or the businesses that create, value and who charge the tax and collect on behalf of GRA. My focus will be on them and how policy impacts them. And then my colleagues will take aspects of the legislation, and other administrative issues. Next. Next, please. Do I control this? Okay, sorry. Okay. So what we have here is a quick snap. We have to put VAT in context. And so the question is the taxes which form, part of the economy. And we are focusing on only the major taxes, So first of all, we have taxes on income and property. And that means taxes that are paid on income, and then if you own property, which is basically income is wages, salaries, allowances, and then also if you have property, rents, and then capital gains, and then for there's a personal income tax of this element which is paid by employees and self-employed persons. And then the second element of that is a corporate income tax. And the corporate income tax is one of the major handles, which we are going to focus on towards the end, of the. So that is the taxes on direct. It's direct because those who earn the income are the ones who account, for the tax. So we'll keep an eye on the corporate income tax, which because of oil, we separate into, corporate income tax, oil, and then non-oil. The Petroleum Revenue Management Act requires that, all revenue from oil sector should be ring-fenced and paid into the petroleum holding funds. So that is. Then the second category is the indirect. So we have direct, indirect, and that is taxes that are paid on goods and services. The first one, obviously, is what we are talking about, the value added tax. And these taxes are added to the price by those who are selling and pay, to GRA. So we use GRA, or for those of us online, whether it's Uganda Revenue Authority, or Kenya Revenue Authority, South Africa, SARS, that's what we're talking about. So we have the VAT. The key word here is neutral. The tax is neutral. So when you consume beer, you pay the tax. Whether the beer is imported or it is produced locally, you pay the tax. So that tax is neutral. It's on both import and export, goods mainly. And then we also have the excise duty, which is also neutral. There was a distinction. One is a general consumption tax, and is supposed to be very broad-based. Excise is punitive, and it's on specific, products only. So even though it's neutral, you know, alcohol, whether it's produced locally or it's imported, you have to pay excise in addition to VAT, right? The other, you know, element is petroleum for environmental and other reasons, tobacco, but we do have it on bottled water and the rest, which connotes a bit of luxury, even though these days you cannot say. So that also is neutral, import, export. But the difference with VAT is that it normally has a higher rate, up to 70%, sometimes, you know, 80% is added. Then we have the taxes on international trade. We discount exports because it doesn't make us competitive. Cocoa Board collects some export duty in lieu of income tax by all farmers, a bit discriminatory because farm income is exempted. But then that is what is also used for cocoa roast and a few other. It used to go into the budget. It still goes in and out. But it's now known for cocoa roast and others. And then we have the import duty, which is discriminatory. Unlike VAT and excise, it is on only imports. So this is why we say it protects local industries. So if you produce, again, let's go back to spirits, alcohol, right? You pay import duty, right? But the guy producing pays only VAT. It doesn't pay import duty. And therefore, it immediately drives a wedge, you know, between domestic and imports. So this is the context. So you can see why VAT, because VAT is neutral like excise, but it is not selected. It's not selective. You know, it's said to have the broadest, you know, tax base. And this is what makes VAT attractive. It has a revenue goal, a primarily revenue goal. But we do exemptions and things, you know, to, you know, move on. So that is the context. We can go back during question time to look at some of these things. So what we have here is the sales and service tax, which used to exist, as was said in the introduction. You know, then we have which changed to VAT, and VAT, the one we adopted, is the invoice credit method. You know, we'll see it. You know, so it replaced those two taxes. So one of the questions will be is, if the VAT is replacing service taxes that used to exist, including telephone calls, landlines at the time, then what is the function of communication service tax? Right? Are we going back? So these are some of the policy questions. You know, and why wouldn't it, could we have just achieved it through an increase in the VAT rate? Is it just a backdoor? Okay. Compared to Get Fund and NHIL, which we would come to, you know, which has seen one of the disruptions in the smooth running. They were collected as if they were VAT. So everything about VAT was just part of Get Fund. Now they are straight levies. So what's the difference? Have they become excise? But they are neutral, right? So they are like excise. And they are also on imports and exports. So what is it? What's the policy goal, you know, in separating them, right? So those are some of the questions which we want to, and then we discuss the political economy. So you see that sort of, and then we have VAT flat rate scheme, withholding and others which we will come to. So that will be the scope of our discussion. Sorry, I'm used to it. Let me just focus on. So the VAT project, this was set already, so 1993, and then suspension in 1995. There's an interesting point here which I like to emphasize and will not repeat. The notion that Ghana did not prepare well for the introduction of VAT. No. Ghana's VAT experiment was fully funded by DFID with advice from Crown agents who were at the forefront of many, you know, VAT advice. And it took the number 18 to 24 months, 1993 to 1995. So there's more in the political economy question than in the lack of preparation, you know, compared to other African countries. That then it was reintroduced anyway in 1998. The law was 98, but implementation 1999. And then a lot of disruption started, you know, from Get Fund to CST to NHI, VAT flat rate scheme and the rest. So in 2013, we did a revamp. Not VAT in isolation, but all the tax laws, you know, were revamped. Because we were in a service economy, we were in an oil economy, and those taxes were 80s and 90s, so we needed to do something about them. So now let us try and understand this table. If it's value added, what are we talking about? So we are assuming that our economy is made up of an importer who imports raw materials and passes it on to the manufacturer, right? The manufacturer adds his own cost and the profit margin, which is the value added, right? And then passes it on to the wholesaler, who then distributes to retailers. So we use this throughout so that we understand. So if there's a VAT policy decision, it is impacting, of course, in the end, you can have service providers and the rest, right? But let's take all of them to be represented by the retailer or the distribution. So this table is saying that the importer brings in raw materials of 1,000. So you see the next column is 1,000. That's the value that was entered the economy. And this could be a farmer also producing at the farm gate with very minimal, let's say, VAT on their inputs. So they start the value addition, the creation of value. Then you can see that the manufacturer creates as value, that is their own inputs and their profit of 800, right? So immediately the value addition in the economy goes up to 1,800. That is 1,000 plus 800, okay? Then the wholesaler comes in, he takes the 1,800 and adds, 600, and it continues. Retailer takes it. So you see the value added, the total is increasing from 1,000 to 1,800. The difference is the 800. And then if you take the 2,400 and the 1,800, the difference is the 600, right? And similarly. So this is very important because the tax will be imposed at every stage where value is added. That's what gives the name, value added tax. Okay? But we'll explain, as we go along. Now, you can remember the tax is not a tax on production. The tax is a tax on consumption. It's not a tax, even though we are using, businesses to collect. It's not a tax on production. So ideally, you can say, let everybody finish the value addition. Let everybody finish the value addition, and then we collect the tax at the end. And that will be 490 at 17.5%. So because you consider the others as not being selling to consumers, you just wait till the end where they are in touch with the consumer and then you sell. But there's a weakness in focusing on the retail. We know it as the informal sector and others in Ghana. So what do? You can also decide to collect on the value added. You remember 1,000, 17.5 is 175. The person has 800, so his tax is only on the value added 140, and then it goes on. And you get the same 490 at the same price, 32, as if you were collecting it at a single point. This is the text. Any policy intervention that changes these two amounts of money introduces a distortion. And it can be positive or negative, like social intervention. If you want to exempt education, health materials, and the rest, you exempt it from the output VAT, and therefore the price goes down. The revenue also. But if you block, we'll come to it. If you intervene with this, you can end up increasing, the price, right? And the revenue or the tax burden. Okay. So we said the weakness already. The weakness is in the fact that, when you do this, at the end, you are dealing with the informal sector, and all that. Now, so what is the VAT mechanism? The VAT mechanism charges all of these people to impose a tax on the cumulative value that is added. So you have 175, and then, sorry, we move on. So you have 175 on the 1,000. The cumulative value added is 1,800. Okay? But remember, in the 1,800, there is 1,000 on which the tax was collected already. So you give the manufacturer credit. That gives the name invoice credit. So he must show an invoice that he paid. So it doesn't double. You don't double the tax, right? Then on the 2,400, There's 1,000 on which the tax was collected already. There's a 600 on which the tax was collected already. And so you give a credit for the next stage. You give a credit for 175, so you give a credit for 315, right? So that they end up paying the tax on just the value added, as we saw previously. And we achieve the same results. So the strength of this, what we say is that if you don't have an invoice, you cannot claim the credit, right? And therefore, we say the VAT is self-policing, because the one buying is anxious, to get the credit. So they help GRA in making sure that they get, because when GRA comes, GRA will want to see before you take your credit. They want to see that, you have an invoice to show that you pay the tax. So they help GRA, right? So when that credit, let's take note, and that's the point with Get Fund and with all, when that credit that is given, right, is refused, denied, or disrupted because there's no invoice, the businessman is not a philanthropist. What do? If they don't have an invoice, or somebody or the officials block the credit, what do? They add it to cost. And so the base will now include the input, the tax on the input which they couldn't claim, a credit. And so this is the difficulty we are having with most of the measures that are being implemented now, right? So when you block the VAT, the VAT which the businessman paid, which used to be Get Fund or NHIL, or when you introduce a new tax, CST, right, and you block input tax credit, or when you introduce even a 3%, which is supposed to be net, yes, but you block that credit, all that credit that is denied will be added to the cost. Will be added to the cost, and therefore it would, what we say, cascade. That's the way we call it. So if you look at, what this exemption, sorry. So we have the extreme case where the credit is, sorry. You can have the extreme case where the credit is denied and the tax increases exponentially because everybody is adding no credit. So they are adding whatever they paid on input. And the tax can go, during question time we can look at it. So you can see the tax can go all the way up to about, the value added can go, including tax, including costs, can go all the way up to about, let's say, instead of 3,000 to 4,000 to 5,000, right? And then the tax keeps multiplying on the tax, and therefore the amount of tax that has to be paid. You can see instead of instead of the 490 that we used to have, this one has increased to 625, right? During question time, we can go through some of these, tables, and this is the extreme case where, they are denied, the tax midstream, and therefore it increases from even 600, it goes up to 823. So anytime the tax goes back into the system, it is blocked, it becomes cost, and then it goes up. And so you will recall that when the Get Fund and the NHIA were excluded from the credit, the first protests came from industry and business. You recall that beer prices went up, cement prices went up. I think it was a public, immediately it was measured, it was implemented. That is because the breweries and the cement factories and the rest were no longer getting the credit. And therefore they were treating the tax they were paying on input. Because they are not consumers, they are businessmen, they were adding it. And therefore the prices all over the country started to go up, right? And the same thing with when you extend the VAT, to wholesalers, the flat rate scheme, and which is a small business scheme, the same way you end up pushing the tax on inputs rather than being a tax on output and giving the credit, so that in the end you have only you are imposing only a tax of less than 400, you end up sometimes imposing, let me just, the time is going fast, so let me just, exports. We don't want to export our tax. We don't even VAT. So what do? We have something called zero rating. The rate, instead of 17.5%, the rate becomes 0, right? So when the person is exporting, in this case, the wholesaler is exporting to another country, they apply a rate of 0 at the point where they are, and therefore they offset. They apply 0, so the output tax, the tax on output, what they are selling, becomes 0. But they are registered, and it's a tax, unlike exemption. So they can claim all the taxes that were paid, right, against that 0. And that's how come GRA, gives a refund to exporters. Right, I think there was something, a flash in the news, GRA can confirm, that even ExxonMobil and others left because of, lack of this credit that was given. There was no confirmation or otherwise, of it. So if businesses don't get, and that is why we set up in the new tax law the tax refund, because all exporters would end up invariably with a refund, even if they are exporting only part of the part that they are exporting, would end up with a refund. So, and this is a situation where the export is done by a manufacturer, not the wholesaler, and you achieve the same results, right? So, what are some of the policy measures that have been introduced? First of all, I mentioned it. The key one is the communication service tax, and lately, because the NHI, the sanitation tax, right? When they were created into a straight levy and a COVID levy, the input tax, even though they were being collected as though they were VAT, the credit was denied, right? So once it's denied, immediately businesses start, adding it to costs. And therefore, costs go up. It's only excise duties and import duties that are added, in the same, manner. So that is one of the policy, effects. And it doesn't make Ghana, competitive either, because some of the costs stick, because no invoices are issued, so they stick, and our exports, even in an era of AFCTA, we are adding costs to our exports, right? Because if you look at some of the tables, and we can look at them, you will see that it is stuck, with costs. And therefore, unlike well, let's say pure VAT, where we used to give credit and even a 0, and therefore the whole of the input tax was refunded to make us competitive, these costs are now being added to exports, and it will harm the economy. We cannot be competitive as the other West African countries, even within West Africa trade, African trade, because Kenya 0 rates. We have a scheme where we have, denied, those credits. We have the VAT flat rate scheme. It's supposed to be 3%, which small entities were also exempted, from the tax, in the past. The VAT flat rate scheme came and is imposing 3%. The worst thing is that it has now been extended to wholesalers and bigger retailers, right? So it's no longer a small tax scheme. So, and because that also comes with, you can say that the difference between the VAT on input and the VAT on output is approximately 3%. But remember, you are not giving, the wholesaler is now in the middle, and you are not giving a tax credit. So if it sells to somebody a service provider who is registered at the end, they'll pass on the cost. So your margin of 3% doesn't hold. When it was on retail, it was at the end. So you can say, yes, it approximates. But right now it's in the middle, right? And don't forget that you can also have a wholesaler who bought from another retailer, an importer or a manufacturer, or even a manufacturer a wholesaler at 3% and selling to a registered manufacturer. Because there's something that says that logically you should sell to only retailers if you're a wholesaler, right? A manufacturer can buy from a wholesaler. So when you say 3%, you are imposing 3% where it should have been 17%, all right, yes. But no invoice was issued, and therefore it will add to the cost, right? So that is, again, and then the other thing too is that the tax authority seems to, shoot themselves in the foot, because we are saying that small retail schemes are for those who cannot keep records, right? But the wholesaler is big. The normal retailer, wholesaler is big. So why the normal large, retailers, the supermarkets, Melcoms, and the rest, they are large. They can keep records. They have accountants and the rest. So why extend a small business scheme to them? In the first place, it defeats your administration, the administrative purposes, compliance, right? Because they are not, they are supposed to keep records before income tax, but they are keeping the invoices anyway. So why don't they? And then because it's added to cost, it is also, defeating, the purpose objectives. So these are a selection. What we want to establish simply is that any policy that disturbs, the right to input tax credit, because VAT is not a tax on business. VAT is a tax on the consumer. So you hurt both business and the consumer, because as we can see, the prices have gone up when you block, that input tax credit. And by the way, get fund. We hear people saying, yeah, but it's like an exercise and whatever. But we do the political economy. We just heard about Kumi Preko. And let me end on this political economy note. Frankly, the VAT was introduced at 15%. At the time, the sales tax was supposed to have gone up to 17.5%, which is where we are now. After Kumi Preko, it became very difficult to reintroduce it at 15%. So it was introduced at 10%. The VAT was introduced at 10%, right? So, but it was not sustainable. It wasn't supporting the budget, right? That revenue was not supporting, even though it has a broader base, it wasn't supporting the budget. So the then government, let me say NDC, decided to increase to 12.5%, but dedicate, the process to education. Who would oppose education, right? So that's how it came. And that's how come it was collected as if it was a VAT. It is a VAT. So we just look at it as an allocation of a VAT that has been collected already, right, and being dedicated to education, right? Okay, the MPP which opposed, this political economy, which opposed the VAT through Kumi Preko and the rest, also came to power. Remember, 12.5% is not sustainable. So they wanted to increase to 15%. What did they do? Okay, if you dedicated it to education and you did this, we are dedicating it to health insurance. So you have NHI, which was also collected as if it was a VAT, right? So the whole thing was just a VAT which is earmarked to education and health. 17.5% came, but then we had, all the issues as we are having now with very little capital expenditure. So it was devoted to what? Ghana Infrastructure Investment Fund. Who doesn't want infrastructure, right? So I think by separating them, they are neither VAT, neither are they excise. And we have defeated the purpose by just adding up to cost. And if I may just scroll, it's not scrolling, okay, to the end. Now this is the result of what we have. These are the major taxes. And you can see the yellow line, which is the corporate income tax, is beginning to perform where it was far below the VAT. So here we are assuming that, this here we have the corporate income tax, we have the import duty, and then we have the excise duty, and these are the strengths of our revenue system, and they should show a certain consistency. But you can see it's all over, and you can see that corporate income tax is going up. I showed this the previous time. What I've done here for clarity, GRA was asking a question. We didn't have time. What I've done is to assume that the health insurance and the GET fund are still VAT, add it to VAT, and let's see the outcome. The next graph assumes that, okay, if they resemble excise, add it to excise, and you get the same result, right? So we have something called a consolidated VAT and a consolidated excise to represent what we have now. In both cases, it's not even yielding the revenue. Now you can see this goes back to 2002. But you can see it is very high. All the graphs are high up to 2006. And that's rebasing. So because the GDP went up. So rebasing is why it is up. And then when you come to 2013, where the new rebasing also starts, you see that, you know, the taxes stalled and whatever, but we had two additional oil fields, so it cushioned it better than in 2006. So rebasing has an impact, and that's why our tax ratios are low, right? And that is why we must, on this note, let me say, that is why we must not be disturbing, you know, the quality of our main taxes. If you go to every developing country, it is these 4 taxes or 5 that are the mainstay. If you introduce a tax like ESLA, it's excise. If it has an objective, 3 to 5 years, let it go. Temporary import duty, don't add it. What are you doing? If you keep it beyond the period when it's supposed to go, you are only disturbing the import duty, you know, rate. Excise is just disturbing, you know. So all those temporary taxes, the fiscal stabilization, you know, levy which was imposed, what is it? It's a corporate income tax, you know, by name, right? So it's disturbing all these taxes. Yeah, they may have a short-term purpose during a crisis like COVID or global financial crisis, doom some. But when they are over, and especially when you have 2 oil fields, let them go so that you can use them for the next crisis. Thank you very much.
Thank you very much, Mr. Tekwe, for that presentation. We're going to move swiftly on to the very next one. And if you have questions, please note them down. We're going to have an interaction after the third one. Our next speaker is a chartered accountant and a member of the Institute of Chartered Accountants, Ghana. Currently teaches or lectures taxation, fiscal policy and planning, computerized accounting information systems and financial accounting. And prior to going into academia, he did work with the Multimedia Group. I'm very happy to say that. Let's welcome Mr. John Amo.
Yeah, good morning to all of us. A brief outline of my presentation. I'll be looking at a brief history of VAT, the rationale for the introduction of VAT in Ghana, events after the implementation of VAT, that's the first coming of VAT, then the factors leading to the withdrawal of the first VAT, then the success stories during the reintroduction of VAT in 1998 will also be discussed. Then more importantly, we'll be looking at the journey so far, 20 years of. We're looking at the VAT journey so far, the bad and the ugly, and also we're looking at the good. From the first presentation, there's no doubt that VAT has now become a very important tool for domestic revenue mobilization. In literature, it's been posited that the adoption or introduction of VAT represents the single most important change in taxation in the 20th century. Currently, as we speak, NASA 2020, VAT exists in more than 160 countries in the world, and 80% of countries in Sub-Saharan Africa have adopted VAT, which is now responsible for a quarter of tax revenues the world over. We also have to put on record that the EU, European Union, and the IMF played very important roles in the widespread adoption of VAT. The period from 1965 to 1994, that's where we have the indirect tax system. We had several challenges with them because, for example, we had 5 different taxes operating at the same time. We had the sales tax, we have the advertisement tax, we have the gains and betting tax, and finally the hotels tax. They were limited in scope, and achievement of revenue targets were a problem. So, factors or the rationale for the introduction of VAT, I'll gloss over the points discussed by our Honorable. One, the first point for the introduction of VAT, the rationale, was that in the 1980s and the 1990s, particularly in the 1990s, there was a gradual decline in foreign aid to developing countries. And according to Van Daal, it was more acute in 1993, where foreign aid from the advanced countries to the developing countries declined by 7%. Then the second reason for the introduction of VAT in Ghana, like I mentioned before, is to replace the 5 basic existing independent taxes, so as to provide a uniform basis for indirect taxation in Ghana. The third reason that is to widen the tax base and broaden the tax base to widen the tax net and broaden the tax base so as to increase revenue. Then the fourth reason, rationale for the introduction of VAT in Ghana was to diversify tax revenue sources. According to Tekwe, 1993, there was a declining export duty on cocoa, and SI duties on petroleum products were also increasing. So therefore, there was the need to look for alternative sources of revenue to support the government budget. Then the fifth reason for the introduction of VAT was the success stories being recorded in countries that have already introduced VAT. And the evidence was copious for Ghana to see that those who have introduced VAT were getting enough revenue. So why not? Then the sixth reason or rationale for the introduction of VAT was to simplify tax administration and enhance compliance. The next was to spread the burden of taxation fairly. We realized that the existing sales tax for 1965 to 1994 was only on consumption, mainly on consumption, but excluded expenditure on goods and services, and there was a need to spread the burden of taxation fairly among taxpayers. The other reason is to correct the cascading effect of tax that the Honorable spoke about. I will skip this. Then events after the VAT was introduced, the first coming of VAT, prices of goods and services shot up. GPRT increased lorry fares by 10%, citing increased prices of spare parts. Then there was the media coverage, disturbing newspaper headlines. For example, in the Daily Graphic, they reported VAT, its effect on prices. Then the Business Chronicle gave the headline, VAT, people are charging VAT on VAT. Then the Statesman reported, VAT, the problem solver arrives in Ghana. Then again, the Daily Graphic, VAT forces prices up. Argument from VAT officials. There was argument from the VAT officials that the introduction of VAT will not lead to the escalation in prices, but actually, Honorable, it did. Because you quoted in the Daily Graphic, 22nd March 1995, that it is regrettable for the public to hold those views that actually the introduction of the VAT will lead to increase in prices. Then the president expressed worry about the VAT implementation. Then on the May Day, 1995, our then Vice President, Koen Kensa-Aka, addressed workers and he called for the withdrawal of the VAT. The other event was that Cabinet decided to review. There was protest against the VAT, etc. Then the withdrawal factors, the main factors leading to the withdrawal of VAT, the first coming, there was a policy management. One, I'm of the opinion that the timing was wrong. 2 months after the 1995 budget had been read, then comes in the VAT. So the timing was wrong. Then one, initially the proposed VAT rate of 17.5% was also considered too high because the sales tax as at that time was 15%. 2, I also shared the opinion that there was poor level of public education by the VAT service. Limited time, you mentioned 18, but I think it was actually 2 months. Then the other issue was that VAT exempted goods such as foods had their prices increased. Then it was the first time we're hearing technical words like the input VAT, output VAT, cascading VAT. It so confused the public, being the first time such a law was being implemented. And also the public was not educated well enough that with the introduction of VAT, there was going to be some form of record keeping so as to be able to file the tax returns, etc. Then the other factor grouped under institutional. 1, goods that were exempt under the sales tax were now being taxed under the VAT. An example is Gary. It was quoted in the Daily Graphic and the Statesman. 2, goods that enjoyed exemption under the GPIC Act were subjected to VAT under the VAT. Thirdly, there was a situation where some imported goods that were exempted from VAT, whilst their domestic inputs were being subjected to VAT. Example is this, imported essential drugs. Then the other problems, difficulties in the computation of VAT, people in displaying goods, people were confused as to what to display. Should they be VAT inclusive or VAT exclusive? It was one of the problems that people encountered. Then political, Honorable spoke about that. But most importantly, the minority, as at the time, I think NDC had 189 members of parliament. But the opposition, the minority leader in parliament, on the floor of parliament, he made a very profound statement that I think affected the thinking of most people. He said that VAT should not be introduced. He referred to VAT as what? Very augmented trouble, VAT. And that caught on with some people. Then lastly, the president, vice president speech to workers on the May Day to revolt against the VAT. Then the reintroduction of VAT. Why was it successful? VAT charged 10%. The second introduction, they charged 10% instead of the initial 17.5% because the sales and the service tax was at 15%. I believe there was adequate public education 10 months as against the initial 2 months. And the second time, there was a political commitment from the presidency. The president and key cabinet members openly supported the reintroduction of the VAT. Then also, most importantly, there was inflation, the inflationary pressures of the 1994-95, which put the VAT, 94 VAT introduction in jeopardy, had eased. The VAT, the inflation as at that time was as high as 59.5%. But as at the second coming of the VAT, it had eased to make the implementation of the VAT reintroduction very easy. Then VAT still had considerable support in the business sector. I remember the then chairman of Unilever Group, Ishmael Yamson. He gave a speech, a seminar, and he stated that we cannot continue to rely on the traditional revenue sources. For a country to move, a country like Ghana to move and to achieve the sustainable development that we expect, we should embrace VAT. So the second coming of VAT had the support of the business community. Then finally, at the second coming, the opposition boycotted the parliamentary elections. Now with the second coming, they were in parliament, so the taxes changed to make a smooth for the implementation of the VAT. Then the journey so far, the bad and the ugly. The imposition of VAT thresholds, because initially they said it should be it should embrace all sectors of the business community. So we are saying that why should there be introduction of VAT thresholds? It's conflict with retailers who can keep their turnover above the threshold. Normally, there's the justification for the inclusion that record keeping, because of the percentage of our population that are unlettered, record keeping could pose a challenge for the small and the petty retailers. And also the second reason is that we need to maximize our scarce resources by concentrating our attention on the large and the medium scale enterprises. But to me, the general principle for even setting a threshold it should be at a point where the cost of collection are balanced against the revenue lost. The second bad and the ugly about VAT introduction 20 years is that it's the non-deductibility of the 17.5% input tax by the retailers and the wholesalers, which I think Doctor has done justice to that. Then the third issue, the bad and the ugly side, the third issue, negative side of the introduction of the VAT, is about fairness and equity. The ability to pay, I believe, was not taken into consideration. Is it fair to impose a flat rate where the poor will have a chunk of their income going to a particular item? Then the fourth area is about regressive nature of VAT. VAT to me has not found enough reasons to go around the regressive nature of VAT. How do we make the regressive nature of VAT less burdensome to taxpayers? People talk about the low income subsidies. Honorable was talking about what? The National Health Insurance Scheme. Is that enough to go around the regressive nature of VAT? Still thinking. Then, when Honorable was talking about the major changes of the VAT in the 2012 major amendments, we noticed that there was less stakeholder consultations. That's how come VAT was introduced on the real estate and the financial sectors. And for that reason, it was soon thereafter suspended. The sixth issue, the bad and the ugly, is the issue of the VAT tax refunds. I think we still have issues with VAT tax refunds. Then the good, 20 years of VAT, it has led to increased tax revenues. The first year after it was introduced, revenues shot up by 20%, even though at a lower rate of 10%. Then less than 2 years after after its reintroduction, the VAT was raised from 10% to 12%. This from IMF, VAT revenue as a percentage of GDP. You notice that even when the second introduction came, the VAT in 1999, 98-99, the VAT revenue as a percentage of GDP was still below 1%. So in 2001, it was still below that. But in 2003, total VAT revenue as a percentage of GDP shot up to 3.3%. And currently, as we speak, 2017, the total VAT revenue as a percentage of GDP is now 4.4%. So it means that it's brought about increased tax revenue. Then the second one is a reduction in tax evasion after reintroduction. A paper I published with Adafula. We noticed that in 1994, the tax evasion as a percentage of GDP was what? 20.67%. Then in 1998, it was 19.64%. But a year after the introduction of VAT, reintroduction, the tax evasion rate dropped to what? 18.76%. So we're saying that the introduction of VAT has brought about a reduction in tax evasion, tax fraud, and tax avoidance. Then the third issue, the good aspect of VAT, is that I'm saying that the VAT pivoted the introduction of National Health Insurance Levy. Because I'm wondering, it's a social intervention. But if it had not been linked to the levy and collection of VAT, I wonder if it would have survived. Though Honorable said it was actually part of this thing that was brought, VAT that was brought. But how many of us know about that? So, and the same thing applies to what the GET fund that Honorable spoke about. That VAT, the introduction of VAT, gave them a leverage for them to be successful. Then the fifth item is about VAT exempted items and zero rated. So I'm asking the question, by exempting certain goods and labeling certain goods and services as zero rated, are we addressing the regressive nature of VAT? Then the sixth item, the good side of VAT, 20 years of implementation, is the perceived effectiveness of VAT. We can see it. Over 180 countries have so far adopted and implemented successfully VAT, with maximum revenues being recorded. Out of that, it's only 3 out of the 5 that removed the policy initially. 3, including Ghana, have reintroduced. So there's the perceived effectiveness of VAT. The 7th area is the innovative self-policing feature when documentation is simple and understood by the taxpayer. Then finally, there's the elimination of multiple indirect taxes. Now VAT, before VAT was introduced, as I mentioned here, we had 5 major indirect taxes. We have the sales tax, we have the hotels and restaurant tax, we have the advertisement tax, we have the betting tax, and the entertainment tax. So the VAT came to consolidate all this into one tax that will help avoid economic distortions, tax complexities that are normally caused by diverse indirect policies. Thank you very much. And we'll pause for questions.
Okay, so
yeah,
we'll do the questions after
right.
Dr. Natchez. Thank you very much, Mr. John Amo, for your presentation. And we're just going to go straight into the very final presentation. See, Dr. Abdullah Ali Nachia is director of Ali Nachia and Associates. As a matter of fact, is one that needs very little introduction. And in the interest of giving him a lot more time to speak, I'll skip giving you a bio, but Nachia is spelled N-A-K-Y-E-A. And you can check with Google and take your time over coffee to read about him. But let's welcome Dr. Ali Nachia.
Thank you. Thank you very much, and good morning. Good morning. I'm always happy when I'm a third speaker, because it makes my work very easy. You know, when you go to the Court of Appeal, you always see 3 judges. When the first one speaks, reads the judgment, the second one says, I concur. The third one says, I have nothing useful to add. So thank you very much. Oh, you still want to hear from me? I think my colleagues have already solved all the problems why we are here. After our 20 years journey, somebody was asking me, VAT is over 26 years, why did we say 20? And I said, when we say you are celebrating 20th anniversary, it straddles to 29th. So you shouldn't worry. I think that everything has been said, and we've all seen the good sides of VAT in terms of revenue generation. The other one I want to add is the fact that at least we have a certainty of tax base. And that has been one of the biggest challenges in revenue mobilization. You cannot hide, you can run. Unless you decide you won't wear clothes, then you won't pay VAT. You won't enjoy services, then you won't pay VAT. So it gives us a stable base where if we want the revenue we can get. But it gets bad and moves to ugly when you overdo it. It's just like everything. If they say wine is good for your heart, if you take too much, it will end you in trouble. So that is the problem I think we have, and policy makers, we are glad they are here, will take notice. The other challenge that I find bad with our VAT over the period is the inconsistency in policy. And my boss policy advisor will agree with me. Because like Honorable Sekpa said, we had VAT flat rate. We withdrew it. What made us introduce it? What made us reduce it? What is giving us the thinking to bring it back? And what have we done to ensure why we removed it has been corrected? Because now the agitations are still there, should be withdrawn. Because of the uneven playing field, as Honorable Sekpa said, if I'm bringing in an item and I'm charged the standard rate because the person I'm buying from is on the standard rate, I can't claim it as an input VAT. And so the bad thing is that the neutrality is gone, because it shouldn't be part of my cost. Now I'll add it to my cost. And the cost of 100 is now 117.5. That's if I'm not going to claim the input tax. And now I have to add my margin and put 3% on it. And that leads to the other aspect Mr. Amo mentioned, the increasing price levels. You can't run away from it. Because if you look at the point where they were reintroducing the flat rate. I heard the Commissioner General then, Mr. Kofinti, mention when they interviewed him, if the flat rate trader is losing the neutrality, how does he get back his input tax credit? And the response is there. You can claim it from your prices. So that's an endorsement of price increase, or it is being called inflation. And the ugliest part of the second phase of flat rate was the fact that any accumulated input tax credit, you've lost it. That was not proper. And I was not surprised, and I was even happy when Honorable Clement Park and Honorable Dr. Ayini went to court and got justice, that it is my cost. You cannot pass a law with retrospective effect under Article 107B of the Constitution. I have incurred it. It's mine. Give it to me. And it wasn't difficult. It shouldn't have landed in court if we could jojo and agree that policy-wise, practically, legally, it can't be done. But it had to land in court for the taxpayers to be given the right to claim any accumulated credit. That I found a little ugly. And why I'm saying the inconsistency in policies, if you would indulge me, look at the amendments to the VAT Act, Value Added Tax Amendment Act 2015, Act 890. It introduced flat rate. And then the refund account, and then the immovable property flat rate, then the excise books, the exemptions for excise books, pharmaceuticals. Then came Value Added Tax Amendment number 2, Act 2015, 904, increase monetary value for threshold for registration, and also a percentage, increase the percentage for the refund account. Then we come again, Value Added Tax Amendment Act 2017, Act 948, classifying financial services, domestic transport, and then giving further legal backing to the VAT flat rate. Then came Value Added Tax Amendment number 2, Act 2017. And what did it say? Remove VAT on stakes on National Lotto. Why am I talking about inconsistency? In the budget, we are now saying we want to go and tax gambling again. So why did we remove it? And that is where I'm talking about certainty in tax policies, which will give us the needed revenue. If we had continued, I'm wondering what would have raised by now. We had the same situation on the small-scale miners. We started with a flat fee of 5, it was removed. So we need to be considered. Value Added Tax Amendment Act 2018, Act 970, that was what revised the rate from the 10 to the 12.5. So you see that the good sides are there in terms of revenue generation, in terms of revenue base and certainty, but then we also have the challenge that Honorable Setekpe mentioned, the multiplicity, the cascading effect of the tax, communication service tax, and I keep saying there is no rule of international law against cascading effect of taxes. But when you overdo it, then you get all the calls, the demonstrations, the cries, which is what you have to avoid. Because I remember the saying that the best policy in taxation is to ensure you can plug as much feathers as possible from the goose with little hissing. So you tax the people that they are happy to even pay. I remember the launching of Professor Raymond Atugbe's work right here in this room on the tax culture in Ghana. And his finding was interesting, that Ghanaians indeed love to pay taxes. And what was it? He used the proxy, that if you go to the church, the mosques, if he's left with the person's last Ghana cedi, he would dance happily and drop it in the box and walk home. Why? He knows what the church will do for him. If he is bereaved, they will be there. If he's getting married, they will be there. And I used to add that when there is outdooring, they will be there, although they weren't invited to the indooring. So that is what people want to see, the tax revenue. What do we see from government to encourage us to continue paying? I was saying that if we have even nothing to show, can we publish what we pay? This is how much was raised. This was what went into it. People will get to even feel that we are not contributing enough. Same as we have with the petroleum revenues. I remember see your signatures, and now I'm seeing honorable signatures. You have to tell us how much was lifted, what was our share, how much did we raise. So we need to look at that for VAT. The good size, Honorable Setekpe and John mentioned it. Through VAT, although it came with a different name, which is the challenge for us teaching taxation. What is a tax? When we start giving them what I call it surnames and middle names, levy, fee, then what is a tax? So I remember when Get Fund was being brought on board, it was mentioned that it is a smuggled VAT. That was the term that was used, backdoor. And so now another government comes, he has to also use the backdoor inhale. And so the backdoor approach continues, COVID levy. So when would we come out, once the policies are, we all can see what Get Fund has done in all the schools. And so it tells that people would be ready. There has been the argument that if we had even considered discussions to get a percentage increase in Get Fund to fund free SHS, it would have been more sustainable than our revenue use. It's about sensitization, education, discussions. When they buy into the idea, who doesn't want to get free education for his or her kids? So it is not the case that people don't like the tax or don't like increases, but once the rationale and the transparency is there, it will move from ugly to good. And then the issue of the cascading effect has been mentioned, and we are seeing it. I've always been pleading with tax policy advisor Daniel Noe, can we revert? He say, Akunda, don't start it. So if we can get it back into the input credit system, then we can get the neutrality being resolved and restored. As for the political economy, I think I wouldn't overemphasize. The Honorable mentioned it. Most of the issues are driven by political economy. Just as John mentioned, if you say value-added tax is value-augmented trouble, in fact, some people were calling it value-added troubles. And then it goes to create the whole political kind of problem for the GRA and Ministry of Finance in its presentation. The other bad thing I was seeing was when John mentioned the purposes, reasons for VAT, and I look today and ask, are they being achieved? What is missing? What can be done right? What can be corrected? Then we come back onto the lane. There seems not to be any shipping us in policy to come back. Because I think that sensitization, education, and guidance for people to comply with the law is better than amending it to suit them, which is what has been happening with the VAT flat rate. When we started, it was good for retailers because of record-keeping challenges. But if it is extended to include manufacturers, indeed, there are some retailers, the volume of the activity, they even still want to voluntarily comply with the standard rate. Why are we denying ourselves that revenue? That, for me, is what I find very unacceptable, if I can use that hard word. And on the administration, I think that the problem started even from day one. Honorable is here. When they thought of VAT service, there were the argument. If VAT is replacing what John listed, sales tax, which was being collected and administered by customs, entertainment duty, hotel tax, gaming and gambling by the former Internal Revenue Service, then it means the capacity and staff exists. Did we need to create a new service? We went all the way from 94, 95, and then in 2009, we said, let's merge all of them again. They have Ghana Revenue Authority. And after merging them, still, we are not even looking at the expertise and competencies to handle. So you have VAT people struggling to appreciate direct tax people struggling to appreciate, and it creates a problem. That's the ugly side. When they come on an audit, we expect a team with VAT expertise, customs expertise, direct tax expertise, one-stop shop, they are done. They go away, the taxpayer does his business, government gets its revenue. But then you have all the arguments which makes the terrain very muddy. The last one I want to mention, which I think I would say is the ugliest, because if we have good, better, best, it should be ugliest. Over the years, all ministers of health, I won't leave any out, because you never went to health, so I would. All ministers of, I stand to be corrected, Mr. Noe, have they, any of them ever come out with the list of the medical supplies? The VAT Act says medical supplies are exempt. What are medical supplies? We are still battling up to date. And the law says the Minister of Health shall come out with a regulation giving us a list of what constitutes medical supply, so we can know. Now here we are in COVID times. Which one is medical supply? We have PPEs. Now they qualify, but have they been put there as medical supply? So a dealer in it would be exempt, and then we can solve, because if we have COVID levy, all these are to help fight COVID. Where is the list of medicals that the ministers of health must assist us to have? And the challenge of the mining sector and petroleum, I think it was mentioned that, well, some are saying that is part of why ExxonMobil left, some are giving other reasons, but whether whichever reason, there is a leaving and they've left. The input tax in exploration and development. You know, the timing for which you can claim, there is no way a mine that is being developed can be completed and production will start within the 3-6 months to be able to claim the input. I know of a mining company that could not start operation since 1997 because the cost of taxes and duties alone to start the project is $177 million. And which shareholder would dump that? So I was asking, we could even think about tax equivalencies. We've flagged the 177 million, bring them in, we've flagged them, go and get the gold out. This gold is going. He has money, come to Bank of Ghana. Our 177, give it to us. But I understand. Governments plan 4-year term. They need the money now. They won't defer for you. That is our challenge. Thank you very much.
Thank you. You're welcome. Thank you very much, Dr. Alina Chair. So we will dive into the dialogue, and so I'm going to come round. I'm not going to pretend I understand tax, so please put your hand up and then I will come to you. That way I don't get to speak very much and drown in the process. Please pass this to Richard for me. Thank you.
Okay. Hello?
Yeah, it's on.
Yes, good morning. My name is Richard Anekwe. I'm the journalist with Business 24. I think in the earlier presentation, one of them talked about the tax to GDP ratio when the VAT came into effect being about
20. Yeah.
Being about 20%. And now we look at, the ratio or the performance that we are doing now, we seem to be lagging behind even our peers. And I also quite remember, in terms of the reasons that were promulgated when the VAT was being introduced, we talked about expanding the tax net. We look at 20 years, from now, 20 years since the VAT came into effect, that 20% tax to GDP ratio has even fallen further. And then we are still hearing widening the tax net or deepening the tax net. I don't know which is which. But then I would want to know, where have we gone wrong in terms of getting more revenue via taxes? And then secondly, when it comes to the implementation of the VAT, yes, Honorable talked about the technicality, the input and output and all that. I don't want to go into any of that. But I want to ask, why is it that we are still doing that kind of paperwork where people have to issue VAT invoice and all that? Why can't we go the POS way? I don't know what the challenge is, because we know with the paper way, there are a lot of people, you go out there, they are doing carding, they'll put card under the invoice, and they do all sort of criminal activities. So what is making it very difficult for us to deploy VAT invoice POS systems whereby it can be issued at a place where you cannot alter it or, forge any. So I want to know the difficulty in there. Thank you.
Thank you very much. I think I'm going to take just one more, and then we'll get some answers to that. Elvis.
My name is Elvis. I write for the Finder newspaper. Mr. Ali Nacha, I wanted to find out your suggestion about 1% increase in the GET fund for funding free SHS. We've been told that inclusive of this year, 5 years, the cost is about 7.7 billion. The 1%, will it have been able to raise that amount of money within this period if that was done? And then, Honorable, you talk about a distortion in terms of other levies and all that is distorting the VAT system. Can you have a list of the taxes or levies you consider as a distortion to the implementation of the VAT? And if they are removed, will that result in an increase in the VAT to take care of the removal of such taxes? Thank you very much.
Thank you. So we're going to take the responses, and then I'll have another round of comments and questions. Over to you.
Okay.
Yeah, your microphone's
Is it on? Yeah. Okay, good. On the tax GDP ratio, let me mention something before maybe Honorable would come in. The dropping of the rate from 20% downwards would have so many factors, one of which is the issue of rebasing. If you rebase your economy, of course, the figures would all be affected. So that could be one of them. Then on the issue of POS, Honorable would maybe confirm it's been with us since 2012, when he was Deputy Minister at that time, right? Yes, it's been in the budget. If you look in our budget, Honorable Akunta here will tell you, it's been in the budget. I have a challenge, the issue of the rollout. I remember one of the challenges was the initial amount required to pre-finance it, so that if it's deployed, the revenue to be generated can pay back. Because for me, that is one sure way to get enough of the VAT revenue. As you indicated, you can't tamper with it, and your sales records can easily be verified from the POS. So I think that they are still looking at it. It's about the funding. And now I'm wondering, if we have all the projections of the revenue it can generate, what is the difficulty if indeed we have to even maybe borrow to buy it and be able to pay back?
Sure.
I think we should think about the way forward. Then for Elvis, the increase in the GET fund. Indeed, even before you would think about the increase, you have other funding sources, isn't it? Before they thought of doing free SHS, they had so many sources of funding. So we are looking at additional ways that can be sustainable. So as you start with it, the evidence of what it can contribute would show that the citizens may come up and even request for a further increase. Who knows? Because GET fund 2.5%, national health insurance 2.5%, the 1% is a proposal. If it can even start at 3% and is acceptable after a discussion, the citizens would agree. So I think that that's the essence. Thank you.
Yeah, thank you very much. I don't think that we achieved 20% tax to GDP ratio. Probably revenue to GDP.
Yeah, revenue to GDP.
I mean, probably revenue to GDP. I think the highest we came was the Sub-Saharan Africa average of about 17% before the rebasing, as he pointed out. Currently, we are between 12 and 13%. and our whole revenue to GDP. The difference is non-tax revenue and grants. That's non-tax revenue and grants. We are hovering, the highest was 17%. I think we are 17.5 or so for the revenue itself. So Ghana is actually a long way off, getting to its peers as 15, and 17.5%. I think not even South Africa is currently doing 20%. But rebasing is one of it. Shocks to the economy, global financial crisis, doomsday, and now COVID, are also, part of the slump, in revenue, apart from the the rebasing. So, but the solution is not always in changing the tax structure. Sure. The solution lies in strengthening, tax administration, and that goes to the point of sale device and others. I think what GRA needs is actually a comprehensive domestic tax, system, just as you have with ICONs and you had previously for the customs. We still don't have that. The only thing that came close to a modern electronic tax system, moving the tax, collection, was the VAT implementation program. When it was introduced, which became TRIPS. So I think that is the main challenge, and that was going to be part of the revenue modernization phase 2, which was financed, by the World Bank. Phase 1 was financed by the World Bank together with the GIFMIS. But I understand, GRC, I understand that there are some, measures being taken. I read about iTax and the rest. So we need a comprehensive domestic tax system, because even if you have a national identification number for everybody, right, the point is GRA would not be effective in enforcement if it cannot, link its domestic tax systems to ICOMs to get how much to compare. Whether if I'm claiming VAT on imports, as to give an example, VAT on imports as a credit or a refund, can GRA verify that did I pay? You can do it through paperwork and the rest, but an electronic system simply brings up the name of all input taxes that were paid, and then it's, and it's not just, there are terminals that show that they have always been there, but the point is putting in programs that would automatically compare the domestic and the rest. So I think that is one of the biggest challenges, that we do have in terms of, revenue administration. When I spoke about distortion, yes, I have an issue with maybe tax handlers that should have been called VAT, or tax handlers that should have been called excise. And I'm not excluding myself as Minister of Finance. ESLA, for example, is a typical, excise type, tax on petroleum, which was meant to resolve, the issue we had with global financial, the banking sector and energy sector crisis, which brings in about 40 billion. So we could have used that to resolve it. But the point I made on that is that, when we talk about those temporary taxes, it's not new. In fact, the first temporary import duty and fiscal stabilization or national stabilization were introduced in the Rawlings era, and they were removed. Once you resolve, when we had, things like bushfires, drought, and the rest, right? I believe either Honorable Banredu or Safumafu introduced temporary taxes, and they were removed. Honorable Dufour introduced them, they were removed. The ones we introduced during the doomsday and other crises was to be removed totally by 2017. Despite 2 offenses, we've not removed them totally. And we've come into another crisis. The time to prepare, as I always say, the time to prepare for crisis is not during the crisis. Could we have increased the stabilization fund, for example, to resolve some of the problems we had, knowing very well that they were set up to resolve crisis when we had 2 additional oil fields, right? Could we have, increased, recapped the stabilization fund, or even if we maintain the cap, put the money into the stabilization fund, sinking fund, and the rest. Okay, but we are going into expenditure management, and it comes to the uses, to which the, revenue is put. So I think those are some of the issues. But the point I made position was in respect to distortion is stopping the right to input tax credit and refunds. I was very careful. I'm saying that is distortionary. For example, removing GET Fund and NHIL, from the VAT base where businesses were getting input tax credit and they were getting refunds if they exported, and then you block it, and then the law itself says that you must add them, to cost. The very thing which one law was preventing, which is the whole essence of introducing VAT, right? And if you ask why it succeeded, right, you mentioned that it succeeded relatively well. One of the key reasons why it succeeded was that the law that suspended the VAT saved the right to input tax credit and refund. And so between 1995, when it was cancelled, and 1998, all the refunds that were due to business were paid. And all the credits that they had were allowed. And it reduced the sales tax that they had to pay. They were allowed. And so business began to realize the difference between the new sales tax, the sales tax that was restored and this tax that was cancelled. And there was no reason why. That's one of the key reasons why we had a support from business, because they had come by allowing the law, allowing that, the VAT mechanism should operate and should not be stopped on account of revenue. They saw the benefit. They saw the clear benefit. And that is the very thing we are removing now. But as the graph shows, we are not even getting the revenue from cascading, because what happens when the tax cascades is that evasion and avoidance comes in. It's as simple as that. Otherwise, the 150 or so countries that you mentioned, they would have had cascading taxes. That's what we call turnover tax. Countries have moved away from it. And I think sometimes when we do this analysis, let's ask ourselves, what is it that we are doing? Are we so unique that the other 100 countries, the other 120 countries, or even the other 50 African countries, are not doing? And why are we doing it? Is it a belief in ourselves? We're supposed to be pioneers, in this reform. So that for me, I think is the key point I was making about the distortion. It distorts. It increases prices. You don't get a revenue anyway because of evasion and avoidance. And the evidence is quite clear. Right.
On the issue of the declining tax revenue GDP ratio, it's for this reason that the Ghana Revenue Authority employed the services of McKinsey Group to help in revenue collection. At the 38th Commonwealth Association of Tax Administrators Conference in Accra, 2017, the Vice President made a statement that Ghana is it's moving towards a decline in taxpayer population. What happens is that he made a statement that out of the 27 million taxpayers that we have, or 27 million people we have, it's only 1.2 million that are paying taxes. That's 4.4%. So if we have a situation where only 4.4% of the population are paying taxes, then we should expect the situation we have ourselves in. There will be a decline in tax revenue GDP ratio. And some researchers ascribe this situation to the multiplicity of taxes, like the recent ones that have been introduced. When there are more taxes and the burden gets on a few compliant taxpayers, what do? They also begin to look for ways and means to evade taxes. And when that happens, then your guess is as good as mine. They will look for ways to evade taxes. There will be tax avoidance, etc. And that's how come we have the tax revenue GDP ratio declining in recent times. Yeah.
If I may make a quick point on the 1%, before the 1%, there was a capping of the GET Fund, and other for free SHS and other priorities. Yeah. And before that 1%, remember, there was also, the mortgaging, if I may put that word, of the GET Fund itself, collecting money in advance, and therefore, actually, most of the GET Fund we are getting now is paying, that debt. Not much is coming. So is the solution tax or the solution lies elsewhere? Remember, we had also used oil revenue until the protests, Remember, we wanted to sweep the stabilization fund. We wanted to sweep, the heritage fund, to promote, those expenditure programs. So I think that sometimes the solution is not in tax. You just keep increasing. You are just chasing after the wind. And that, I think, is something which we have to bear in mind. If you want to find a tax solution to problems that are not tax, you end up just increasing the tax rate. But Ghana has had a liberal, tax rate. If you take the PIT used to be about 55%. I was part of those reforms. We brought it down all the way to 25. Now it's back to 30. It was going to be 35, right? And now we are increasing other taxes. Even the so-called nuisance taxes, we have retained them. They have not gone, and we are increasing them. So I think that there's also a problem, probably on the expenditure side, for which we are borrowing about 2.2 billion Ghana cedis, of the 2020 bond, I believe, went into free SHS. It's not a small amount of, money. So I think that we need to also, in discussing taxation, we need to look in tandem with other, PFM measures that are taking place in the economy.
Wonderful. All right. So, Professor Bocking.
Thank you. So there was something that you said, which we have the main broad pathway in terms of introducing taxes. And I think we have been using the back doors. And when you look at it, it's almost like introducing something to trick the citizens. And that is not good. And perhaps that may explain the reason why compliance is low. Sometimes when you look at the entire country from policy introduction, all of that, it's as though the country is founded on fraud. Okay. And why am I saying so? Forgive me, because if you look at buying land in Accra, sometimes you have to pray and fast for the Holy Spirit to reveal the true owner. Okay. But that's not the only issue. And then you see how we take advantage of this true crisis. And even if you look at how we are buying vaccines now, and the margins and all of that, you see, that itself is not good in terms of the trust of the citizens in the state. Because one basic function of the state is to collect taxes. But since the days of Jesus, paying tax has not been easy. It was one question Jesus couldn't evade, whether it was lawful to pay taxes to Caesar. He had to answer that. But the reason I'm saying that is that, you see, and let's also get it, and I agree with you, Honorable, there is no way we can tax ourselves out of poverty. We can't, and let's not try it. You see, if you look at our VAT cumulative rate, where it is, it's one of the highest, even among our peers. If you add all of them, even say some of them are no longer treated as VAT and all of that, please just look at all of that. But if you look at our VAT efficiency, it's also not the best, even compared to our peers. And today I haven't heard a lot about the VAT efficiency, because you want to look at the optimal and where we are now. And I'm wondering whether it's possible. I haven't seen that. I'm wondering whether at the policy level we did some kind of empirical regularity to underpin that. Because you are introducing VAT, you want to be able to look at the optimal amount this could raise. And where you are now, then you want to be able to see what I need to do to increase it to that level. I'm not too sure we have that. I haven't seen it. It's possible we do, but I haven't seen that. And then the other issue is the rebasing, which dwarfs the tax effort. Look, but in the immediate, that should be possible. In the medium to the long term, I think that nets off to some extent. Why are we saying so? Because these are emerging areas that hitherto were not captured. But if they are captured, this is revenue flow. So it should translate to corresponding tax increase if we were doing greater tax compliance. So in the immediate, we could use that as an excuse, but after a while, it's no longer an excuse. Yes, it's no longer an excuse. So the question would have been that what are the emerging areas that are captured now that hitherto were not? And then GRA could move in aggressively and say that, yeah, these are the emerging areas. Because as we see it may not be long. Another rebasing may have to happen because economies are being digitized increasingly. And probably other countries may be thinking about digital tax. and the rest of them. So to make sure that we get a lot more revenue from all of this. So I think, and I didn't see, Honorable, maybe it's a topical issue, VAT exemptions. Okay, perhaps that explains the reason why our VAT efficiency is one of the lowest. But in summary, all that I want to say is that we must be clear in our mind that we cannot tax our way out of poverty. We must, and I agree with you, Honorable, when we say that the issue is not the more taxes. We should be looking at the expenditure side and the efficiency and all of that. If we don't do that, I'm not too sure we will go beyond the zero-sum game. Thank you.
Okay, so I'm going to go to Dr. Charles Adai from the GRA for some thoughts.
Okay.
Oh. Okay, I think you were writing some formulas, so
no, let me
you can, okay, do that. All right.
Okay, thank you very much. Let me sit down so that I can look at my records. I want to set certain things straight. So far, I think we were talking about the VAT contribution to GDP. But the highest that we have ever recorded happened in 2004. And that gave us, I think, 6% or so to GDP. Let me look at it. That's VAT contribution to GDP, non-oil GDP. It gave us 6.2%. And that happened in 2004. Yeah, so I wanted to just get it correct. It's not 20. Even total revenue, total tax revenue, we have never hit 20. Okay, so, yeah. Yeah, if it is total, then total.
Talking about VAT, I was talking about total revenue. I said we had not even.
Okay. All right. Okay, if you look at the contribution to total revenue, VAT contribution to total revenue, earlier on when we introduced VAT in Ghana, around 2000 to 2004, revenue was very, very good. Our VAT contribution to total revenue, rose as high as 41%, and that happened in 2008. Now currently we are recording only about 27%, 27.2 in 2020. That is when you compute the contribution of VAT to total tax revenue. Sure. Now corporate tax is leading. Initially VAT was leading, and now corporate tax has taken over. Now, again, if you look at, there was something that we discussed on rebasing of the GDP. That has been another challenge to us because when the rebasing is done, normally the tax revenue has been corrected already. And then rebasing is done after sometimes about 3-4 years. And then you get to know that the GDP has gone up. The base has gone up. We did one, I think in 2000, was it 2009? I reduced they took effect from 2006, and that affected the tax revenue contribution to GDP, seriously. And then the other one that was done in 2018 or so, that also took effect from 2011. And the tax to GDP, which we were recording almost about 23%, dropped to 11.2. Currently, we are now heading towards struggling, trying to rise again to 14.5, which we recorded last year. Now, if we should do it again, we are going to go down, seriously. The reason is that when the GDP is computed, when they are computing it, there are certain things that are taken into consideration, especially the agricultural products and other things, which normally goes to increase the GDP. But those values are not taxed. They are not taxable. So you end up getting the tax revenue going down seriously. So that is another effect that we have on tax revenue contribution to GDP. I want to also add that I think one contributor from the public, it was a question. He said our tax rate is one of the highest, and I think that one too is wrong. Yes. Our VAT rate, current rate is 12.5. And it's the second lowest in Africa, if you look at 8 countries. Apart from Nigeria, that is recording 7%. Nigeria tax rate is 7%. It was even 5%. The current rate increased it to 7%. But Ghana, we are now at 12.5. If you take the discoupling of the the National Health Insurance Levy and the GET Fund out of it, we are now around 12.5%. Yes.
Effectively want to know.
Please, let me come. You see, the country, we have a policy. We have a policy, and the direction of the country now is that those levies are no more VAT. Okay, so we have to accept it on that line. And then
that's what we are asking in name and in law, but in substance, what are they?
Yes.
You've not removed the GET fund.
Yes. Yes, I agree. I agree. But the policy now is that, if we decide that we want to consider them as VAT, and then we do both input output as Honorable just stated, that is fine. But we had a challenge with those issues, especially when we come to the flat rate. I can go through that one. We have almost about 11 issues that came up. We don't have time enough for me to take you through all that. But for now, the policy on the ground is that
is what
National Health Insurance Levy is no more VAT. It's a levy. GET Fund is no more VAT. And so our tax rate is 12.5%. And it's one of the second lowest in Africa. 12.5. The next one is Egypt, which is 14. And then I think we have the highest, which is Morocco. No, not Morocco. I think, let me see. The highest that we have, I think, is Morocco. That is about 20%. So if you want to increase the VAT revenue, I would go with Honorable Minister when he said that the distributors and the big retailers, there's no need for us to. They have accounts. They keep accounts. They have records. They have accountants. So there's no need to put them on the flat rate scheme, because those on the flat rate scheme, we consider them as people who do not keep records, and it's very difficult for us to do this input output with them, and their margin of profit too is so low. So when we use them as flat rate, that's fine. But the flat rate is not only being practiced in Ghana. We have Sierra Leone, they also practice flat rate at 3%. And then Kenya, they are also doing it at 4%. But they use that one for the informal sector. So if you are doing it, it's not too bad. But to include the retailers and the distributors is a problem. Yeah, thank you.
You're welcome.
So we have quite a number of questions from our Zoom participants. I'll be fielding them in a moment.
Thank you.
It's on.
Yeah, thank you very much. Am I being heard? Right. Yeah, so I heard a lot about, policy inconsistencies and the rest of it, but not much on the implementation challenges and the incentives for the average person to even pay the VAT and for businesses to collect the VAT. I think my colleague here tried mentioning the archaic systems of collecting the tax using invoices that you can actually manipulate. And I mean, we have done some work where citizens in some businesses, they have opportunity to choose whether you want a price with VAT or a price without VAT, for which many people have been encouraged to evade the tax. And we have printed the books, they are there, and businesses are being compelled to use them. There are proposals to use POS systems to address that. But I think we should probably analyze that to see what context-appropriate solutions can address it. Because we are a cash economy. People go to the tail with money. And we have conversations around big businesses who run softwares behind their computers that recalibrate, invoices in the back end when they have generated an invoice for you. So that requires deeper conversation on how do you address these kind of loopholes to be able to optimize the tax policy. And I think the conversation that Prof raised about the credibility of tax policy, right? Who are you deceiving? Why are you trying to explain in a different way where all of us know that this is what you are actually trying to do? If you collect, NHIL 2.5, you collect get fund 2.5, and then you cap it, and the rest go where? They go into the budget, to fund the budget. So it's also tax. It goes to do what the VAT is going to do. You pick an invoice, one sheet of paper, all these things are taxed at the same time, and you're saying it's not VAT. I think we need to bring credibility to the conversation and also begin to interrogate what the revenue actually also deliver. And that also encourages people to weigh the options, whether to pay the tax to the state or to keep the money. Because when they see the effect of paying the tax, that encourages people to comply with the tax policy. And also the collection becomes easier for citizens to do that. Those issues have to be really addressed so that we can streamline things and be effective at delivering on them. So GRA, I'm happy the GRA is here. We'll have to pick up on some of those loopholes that are glaring. When you go out there, you see people evade the tax, and they have systems to manipulate the calculation of the tax in the back end, and not much is being done. And that's where citizens can also come in, where you have a system that allows people to verify how much tax they have paid on a product, for example. It's easier today to pay tax and even use a text message to verify whether the tax is in the GRA system or not, rather than printing books, that really don't achieve the results that you want to get.
So I'm going to take one final comment, and then I will go to all the comments and questions from Zoom.
All right, thank you. My name is Etonam. So my very first question will be on emerging areas to tax in the spirit of widening the tax net. There are conversations about taxing online businesses and as a way of widening the tax nets. And so my question is, what will it take to be able to tax online businesses? I mean, there are also concerns that we don't have a strong database as a country to begin to tax online businesses. Okay, so that'll be my first question. Dr. Ali Nacha, you spoke about our biggest challenge being having a certainty of a tax base. You speak about inconsistencies in amendments. If you can throw a bit more light on that, I'm not sure I got that. And Mr. Amo spoke about VAT in its nature being regressive. If you can explain that as well, I think that'll be all. Thank you.
The mic. Thank you. So I think we'll field this round. Or maybe we've got 15 minutes to wrap up, so let me just share this ones from our Zoom audience. So Isaac Yale sends this one through. It says the introduction of withholding tax on VAT is actually a big problem for some sectors, especially those with a very high monthly turnover. And he goes on to share a scenario. If a client withhold from your VAT and did not pay on time at the time you're filing your VAT returns for the same revenue, you're compelled to pay for that tax for the amount withheld by the client that has yet to be paid. And he believes this is also quite ugly, and the authority is aware of this challenge, but feels that nothing is being done. How can this be resolved? And then the next comment has to do with suppliers now adding 1% on top of the usual 3%. So suppliers who are on the flat rate scheme are adding 1% on top of the 3%. I'd want to know, how can we withhold tax when making payment to them? If that's workable. And Philip Odosu is a tax student, and he's kindly requesting that we share with him the materials that you use for the presentation. So we'll see about that. So, gentlemen, over to you to field the questions. In fact, there's one more question that I think Richard asked a question. I don't know whether that part was answered, and it has to do with 20 years on, why are we still talking widening the tax net?
That's the problem. Okay, if I can start and then defer to my colleagues to answer. First of all, a quick round. Rebasing. when we talk about tax and rebasing, let me take a PFM perspective. Remember that your debt to GDP ratio is also declining, your expenditure to GDP ratio is also declining. You know, and often we just jump quickly and say our debt to GDP ratio, you know, has declined. For example, it was 70%, the last one. It declined in 2016 after the rebasing to 57%, you know, and then it's gone up. But let me link this to expanding the tax net, you know. I think when we talk about expanding the tax net in Ghana, we tend to focus so much on the informal sector. But when you rebase, you are recognizing that the structure of the economy is changing. Services sector has come on stream. Petroleum sector has come together with East Petroleum Services on stream. Businesses are moving in that direction. And GRA, therefore, needs to both the tax policy, its structure, and compliance. And that goes to part of the difficulty in introducing VAT. Actually, we did not, in 2013, we did not introduce the tax on financial services. No country does that because you don't put VAT on interest, for example. What we did was to put it on non-core financial services. We did not also put it on residential housing. We put it on rental, commercial, you know. If your economy is expanding and construction is booming, and your financial sector is booming, and you want to live with the ghost of VAT and don't expand your tax net will remain narrow. You continue to tax only the old sector of the economy. You are not moving your tax. You know, that's another sense in which we should look at, you know, expanding the tax net, right? A lot of income is being made on financial instruments, but we have remained, you know, in the mode when treasury bills were not subject, you know, to tax. But a lot of income, and we rolled back. Maybe what we should have is a minimum, you know, a minimum level of income from, say, T-bills and other instruments. We should not be taxed, which was where we're moving. And therefore, those who have pittance in investments will not be taxed. But beyond that threshold, it's income. You know, what's the difference between keeping my money in T-bills and in building that is rent, right? I earn income if I put it in instruments. I earn income if I put up a house, and you are taxing rent, which is old economy, and you don't want to expand the tax net. You know, but when it comes to VAT, I think that some of these issues that were misunderstood, even if you go back to the 1994, you know, VAT Act, it never taxed, you know, financial services comprehensively. It didn't. But we are living with it, and it's constraining our ability to expand the tax net. And I think if we can make these things as apolitical as possible, I think we can move. Small entities will always be with us. Ghana had a standard, you know, assessment, which we changed to presumptive taxation for the income tax. What we attempted to do in 2013 was to say, you quoted Kenya and the rest. The small entity rate was in lieu of both income tax presumptive and VAT, and that is why there's a VAT reference to the Income Tax Act. If you go to this, the modified, taxation, it was in lieu of both to make it easy for them to comply. It has been amended. It's not been implemented, right? So I think that, again, if we can just exercise this issue of, and that made it, therefore, you can have your VAT flat rate scheme, but it's in lieu of both, VAT, which they should have paid. And then maybe you make, and that's how you make the conventional threshold realistic by increasing it. Because your small entity, especially in sub-Saharan African environment, will never be able to keep proper records for some time to come. Of course, you can apply to digitization and others, to come. But again, I think this is, another area which I think part of the problem also with expanding the tax base, and as I mentioned already, is automating, GRA, domestic, tax comprehensively. If you don't automate it comprehensively, and I'm glad that some movement is moving in that direction, maybe we can make a direct appeal to, the World Bank rep here who helps to finance some of this infrastructure, so that we can make a case, and once you automate, the issue of audit, which you were mentioning, becomes easier, because audit is based on reference, it's based on data, it's based on information. And for the more you automate, even GRA would have, what used to be called the computer-assisted, auditing techniques and the equipment, the software that is intrusive and can go, it's legal, can verify what records are being kept electronically, what is being, and so I think we should. VAT efficiency, I do agree with you. We need to be, looking at the efficiency, of our taxes. We did not, touch it, at all. Withholding was in the presentation, but for lack of time. I think the only point I'd like to make about withholding is that the VAT on inputs is itself a withholding. And so you are duplicating, you are bringing income tax ideas. Because if you say that the tax is on output, right, but the one collecting should pay on input, right, you are withholding the part of the tax that was paid. So it's itself, the input tax credit mechanism is a withholding mechanism. And therefore, it is when you destroy the invoice basis for that verification through the VAT rate scheme and others, right, then you don't have that evidence. So you jump to income tax and you want to do withholding. But the MERS mechanism, self-policing, which is the greatest, audit trail and all those things, those features of VAT, we know that they are based on invoicing. They are based on the fact that input tax is a withholding mechanism. And so maybe if we can go back to the principles, we will be able, anyway, Ali can, continue with the discussion.
Okay.
Thank you.
I think that on the question Isaac Yale asked, I'll be surprised if the revenue has appointed a person as a withholding agent and he has withheld and not given. I don't see why I should be asked to pay again.
Yeah.
Is that what it is? I don't think so. So as long as they appointed the taxpayer withholding agent and he's withheld the 7% from the VAT, no one should ask you to pay up because that withholding agent has not filed. No, you should resist that. And then on the 1% there, then yes, it's the law, and that's the share of the COVID relief levy. But the VAT withholding is only on the standard rate suppliers. It doesn't affect the flat rate. So the flat rate, there is no VAT withholding. Then Etonam, on the inconsistencies in tax policy, that is what my boss Ben Boachi mentioned about the credibility of tax policy. What I was driving at is that can we be consistent? Because if you had a VAT flat rate, what made you withdraw it and you are reintroducing it? And so you address the challenges so that if there was a need for it to come back, as Mr. Ade just mentioned, why did we add the distributors and wholesalers? So if we see it's a challenge, we could revise it again and revisit what used to be there. So that's the issue about the inconsistency I was referring to. Then for the emerging areas, like Prof. Bokwin mentioned, I thought my only comment on the emerging areas not captured is that is one of the frauds being perpetrated, as you mentioned. Yeah, so that is what was raised here. With COVID, we are seeing more ICT-based interaction, business. And I know the GRA has come out with a policy on taxation of the digital economy. I think the Commissioner General mentioned it yesterday or 2 days ago, so I'm sure it's going to be rolled out soon. And then also I was impressed with the launch or introduction of the app on the rent tax. Now that is one area, I think, with the app's development, whether we could look at the VAT, as he mentioned, to move away from the paper economy. I'm sure GRA is always coming out with modernity, ICT, so they will get there to get the VAT. Because like I keep saying, with all our Momo transactions, I think it's time we start looking at the SMEs. They could be filing through that. We could arrange and get the collaboration of the telcos to help us with an app to get people to, like in South Africa, you can be filing returns, you want to do it every 2 weeks, every 1 month. So you don't wait till you're engulfed in the huge liability. So we can gradually move there. So ICT, I'm sure, is coming on board, so we don't have a problem. Then my boss, Ben Boachi, yes, implementation challenges. I think at the last meeting and discussion we had with Imani, we raised this issue on the implementation. before the GRA, VAT service used to have verification visits to monitor implementation and raise the issues. But with the merger, I've not heard of it. It's only the audit. But the time it takes to get to a taxpayer to audit, they would have covered tracks. But the verification was said that once you file VAT 30 days after the collection, then the following month they are visiting to check what you filed with your record. So I think we have that challenge of implementation. I thought John mentioned it. So, yeah. And then the recommendation, the challenge I think GRA has with the computerized invoicing, because some taxpayers have the permit and the permission to generate their own invoices. But the challenge is what Mr. Bemboache mentioned. What if the back end, they are adjusting and showing you only what you can see? It's a big problem trying to interface. And like Honorable said, mentioned, developing computer-assisted audit techniques to be able to uncover such is a key issue that the GRA must look at. So I think that we have covered the issues, unless you want to add anything.
I think our lady wanted to know, wanted me to throw more light on the regressive nature of VAT. You know, VAT is a flat tax rate. So what normally happens is that the poor, now they spend a higher percentage, because it is flat, a higher percentage of their incomes on whatever food items they purchase. So by so doing, it makes the VAT regressive. It hits the poorer harder than the rich because they earn higher incomes. Yeah, thank you.
A quick point on that. When it comes to that, all indirect taxes are regressive. Because your import duty and others, and therefore the thing is to look into your fiscal, and that's why even the VAT exempts, say, education, health, basic food, transport. You know, and again, for example, Gary, yes, the point was that if Gary is sold in the supermarket, you know, they are taxable. But, you know, during those days, again, to go back to the introduction, I mean, Gary in the markets and things were not. But to admit, you know, when you are having increasing prices which may not have anything to do with VAT, you get those, and it is felt that, you know, so those exemptions, and then also the income tax progressive rates, you know, which exempt a certain income, you know, from taxation, which the TUC recently said should be a living wage, if you remember, the effort to peg it to minimum wage. Those are some of the things you use other measures to reduce the impact, the regressivity of the particularly indirect taxes. And just to end on another note, I think the point about transparency, I think we should get it clear. Yes, the VAT increase was called Get Fund, and it was called NHI. But if you look at the bill that went to Parliament, that's why, in fact, it was in the VAT Act or in the Get Fund, it was reproduced. You could see everything about it was, you know, was for earmarking. Everything about it was VAT. And then it was, the revenue was earmarked for education and health purposes. I think that there is some transparency. Maybe it may not go down to the common man level, but for the legislators, and the same thing with ESLA. ESLA, if you agree with me, we even had to calculate the liability, right? And that's how come we knew it had to lapse in 3 to 5 years. Yes. And I think, except the mistake I admit was that, you know, they raised that point. You know, but it was difficult to say, yes, it would terminate in 5 years, when we didn't, you know how much revenue was. It was a forecast. But if we had done it, maybe it would have terminated, you know, in 2020. But the fact that, you know, you are introducing a tax, you don't also want to distort the excise regime with a new tax because it's supposed to go away. You don't want to distort the import duty regime with a temporary import duty. You don't want to distort the corporate, because these are measures on the revenue side which are brought in when you have a difficulty. Sure. And so keeping them as such, I think, is quite transparent to say what you want to do with it, and that it will lapse. It's when you keep it, you know, and you don't, then I agree that it looks like a backdoor, you know, introduction, you know, of a tax measure. Yeah.
Wonderful. I have one final question, and it has to do with the calculation of the VAT. Now, Dr. Dai mentioned that the VAT rate was, our tax rate was 12%. However, it seems that you get to pay tax on the levy, the NHIL. Yeah, but technically, how does the levy account as a value-added tax? What value does the business create in paying that levy, for which you then apply the 12.5% on top of that?
Thank you. I think some of these policies are coming in because we need money. It is very good we have met at this point to look at these issues, and some of these challenges that we are having as a nation, we'll look at it. I know very soon the media review will come in, we'll look at policies. And then in October, we'll also look at policies for 2022 budget. So some of these issues that you are raising here, sometimes it's very difficult to answer them here, but at the policy level, we'll look at them and then answer, find some solutions to them. So I would say thank you for that. We'll consider all that.
Dan is here.
Dan is around, eh?
Yes.
Yeah, Dan, you want to give a contribution. Sorry.
So I'll come to you after Dan.
In answer to your last question, that is why we cannot call them a VAT. If they were a VAT, they would be on the same base.
No, the question has to do with the computation.
Yes.
So so there's a 2.5% NHIL, and then there's a 2.5% get fund.
Yes.
So on a transaction of 100 cedis being the total, you're now looking at 2 cedi 50 pesos, 5 cedis on top of that. Why do you apply the 12.5% tax on a levy, when in itself is not a productive part of the transaction? So you're taxing a tax.
Yeah. No, it's part of the cost.
And that's what's been happening.
I mean, the speakers have said that it becomes part of the cost. I mean, that's what the speaker said. It becomes part and that's why it is not a VAT.
A levy is a form of a tax, if I'm not mistaken.
Hold on a minute.
A levy is a form of a tax.
You asked a question,
so
listen to the answer.
All right.
You asked a question, listen to the answer. I said that. Now, the speakers have said that the levies add to the cost of the product. The VAT is on the cost of the product. So automatically, it will be included in the charge it will include the cost that the VAT will be charged on, which is what makes it not a VAT, as Dr. The other issues are there, the other discussions, arguments are there. But that is why it is added before the VAT is added. If it had been a VAT, it would have been the same, the VAT would have the same base as the VAT. So that's the basically that's the explanation. It's a bit technical, but that's the only way to explain.
No, I don't think at the level I'm asking.
Doctor wants to.
I think the reason why maybe Honorable said and myself still don't understand why we don't want to see the levy as a tax is that in our own Revenue Administration Act, we've defined a tax to include a fee, a levy.
Yes.
And any amount charged under any act administered by the Commissioner General. So at what point are we saying a levy is not a tax? That is my worry. And the questioner's issue is that if VAT 12.5% is on value addition, how can the levies be value addition on which the 12.5 should hit? That's the person's question. So it's a cascading element, and the fact is what the basis of the straight levy. I think that's where the issues are.
I don't think that I said that the levies are not a tax. Let me correct that one.
Okay.
I did not say they are not a tax.
Yeah.
What I said is that they are not a VAT. Otherwise, they would have been on the same base as the VAT. They wouldn't have been included in the cost before the VAT is charged on it.
That's but the argument is this: they used to be, and they were moved.
Yes.
That is where the problem is.
The person asked a specific question, and I'm answering that question.
Okay.
I'm not going into this part of the argument
yet.
That debate we've been having it, and we'll continue to have it. We'll continue to have it. So please,
No
let's
problem.
sort that one out.
Yes.
Okay. Let's not.
Yeah, but that is giving rise to that question.
Yes, so that's why I've explained that because it's not part of the VAT, it becomes part of the cost.
Okay.
And therefore, the VAT is charged on the total cost, and that's why the VAT is on that.
Yes.
It's included in the cost and it's taxed.
Yes. But
So
that's
as
what
I
I explained, that the cascading effect, there is no rule of international law. So that one agreed with you. You can't explain it. Because communication service tax is also on the service and VAT is on it.
Import duty.
Import goods, import duty. You add the import duty and hammer the VAT on it.
Yes.
So cascading effect is everywhere. So that one, the point is, so says the law. Finish.
Okay.
The answer is that the law says so.
And as I said, the other part of the debate, we'll continue it.
So
Yeah,
once the law has said it,
It's
done.
You have to comply.
Okay. Like Dr. Kumbo says, a tax is what the law says it is.
True.
So, a quick point on this. I think that
So,
we should recognize that even the old sales taxes that we had, not the service taxes, put the manufacturers that were collecting in the ring. And the tax on their input was deferred. Right? So it is not even new to us because we are talking about a consumption tax. Right? And it's not a tax on inputs. That is the, put the law aside, that is the technical question we are discussing. That it is replacing a tax which was a consumption tax and remains a consumption tax. Right? And so in the case of, you don't reimpose import duty. Once it's collected at the port, it's collected, and that's it. It goes into the base once, yes, it cascades and whatever, similar with excise. But this is a consumption tax, not on inputs. And therefore, that's the reason why we are saying, why add it back? When even under the old law, there was a ring system or the defense system that strenuously, lifted, deferred or make sure that the manufacturers who were collecting did not impose a tax on their input. So why go back, to even, so the distinction was the deferral versus the credit. And the credit, because of the superior collection mechanism, that's why many countries shifted from the ring or deferral to that. So we're saying that, as you said, we're just making a recommendation for us to look at the rationale. Of course, you don't make policy, but it can be taken as part of policy review. Taxes evolve, measures are taken, and sometimes, they have the unintended effect, and the reversal is therefore warranted.
okay, wonderful. So,
Thank you so much for this very interesting conversation, and thanks to the organizers especially, and these wonderful presentations. I learned so much. And the key takeaways were like any exemptions or flat rating, presumptive tax, these distortions actually lead to suboptimal results in government revenues. The other point which was raised by the Honorable before was like you see the taxation as one part of the public financial management, right? So on one side you see the efficiency of revenues, the other side you also see the efficiency of expenditures. And when you don't have it there, you resort to these piggybackings, like the Ghana Education Trust Fund or NHIL, which is, and this is one area I think where we need to have more analysis, the impact of this, earmarking taxes to certain kinds of expenditures. On health, the argument is very strong, where you don't want the money to follow the doctors, or the health staff. You want the money to follow the patients. And through this National Health Insurance Scheme, that's precisely what you achieve. You are incentivizing the service providers. On education side, I don't know how the mechanism works, but this, I think this would be an interesting debate. But on the other side, it also causes fragmentation. How the sectors, the health sector and education sectors are funded, and create some complacency. So I think one needs to look at this, and again, like piggybacking as a general idea is not a good thing, and eventually I think everything should become part of the VAT instead of this like earmarking, and then the NHIL and GET fund or whatever mechanism to finance health and education sectors should come from the budget. So these are, I think this is a beginning, as you said, this is the first of its series of seminars. So I think it's a beginning, it's a very good beginning, and I'm again very grateful to the organizers.
Right, so that's Ahmad Salim, his public sector specialist with the World Bank. And I think at this point, I will just go right down the panel, starting with Mr. Amo. 30-second wrap-up, final words, and then I'll call on Norvan immediately after we're done, and then we'll go.
Yeah, my issue during this presentation has been that it's more of food for thought. If Ghana is now deemed a consumption-based economy, and VAT is supposed to be on the value addition, right down from the manufacturer to the, how do you call it, the retailer, why should we even levy VAT at each stage of the production? So I want to leave us with this thought. If how do you call, I don't know if Honorable can have can add it to his conclusion or concluding remarks. Yeah.
So, Mr. Nasha, your final words.
But my final words are that we should just keep things simple. Simplicity makes compliance very easy.
Yeah.
And then the idea of looking at the cashless economy from all the automation going on. But the last one is that this is a forum that all taxpayers should take advantage of. As Mr. Ade mentioned, they will soon be going to media review. If they have any issues, proposals, they should move it forward. Daniel No is here, tax policy advisor. They move their concerns, because sometimes we seem to be speaking from different angles. And like John said, I'm sure PFM Tax Africa will put together after this meeting a kind of proposal, and then the summary recommendations for the input of government. Thank you very much.
Thank you. Over to you, Mr. Tegwe.
Ali Nacha and Associates will help us do that. Yes, quickly. You know, every country and the VAT has come to represent that. Let's face it, the VAT as a consumption tax has a broadest base and it has a revenue objective. And yes, you allow for limited exemptions like education, health, you know, to complement the progressive income tax and the rest. But its objective is to stabilize the revenue base as broadly as possible. However, the key point about it is to make sure that as a consumption tax, it does not penalize the producers and the businesses that are being used as mere agents for collecting, you know, the tax. And I think this is where I think we are moving, you know, we are going wrong. And I think this is a correction that we have to make. And it will not sacrifice revenue, because what is happening now is that the cascading always encourages evasion and avoidance. Otherwise, many countries would have turnover taxes. They wouldn't have VAT. I think to make it buoyant, when we remove these temptations, I think that we stand a great deal. We have a great deal to benefit, you know, from the VAT, which by definition, if it's not exempted, it's taxable. And therefore, it means any new emerging economy, and that's why even the advanced countries are talking about the best form of taxing the digital economy. I remember when I started my studies, it was the e-commerce taxation, as they called it, was a no-go area. But today, even the advanced countries, you know, are going there. And so that would be my concluding thoughts, is to make, as Ali said, you know, to make the VAT regime as simple as possible, to facilitate both compliance and administration. And then my appeal, you know, as a former GRA, non-minister, is to say, let us move to equip, you know, GRA, particularly its automation, which, as I said, I believe government has started, you know, doing some work on it. I read somewhere. And I just want to, you know, support that move, you know, as a former tax collector. Thank you.
Okay, well, thank you, gentlemen. And with that, I call on Norvan Akwa-Hayford to give us a vote of thanks and closing remark.
Thank you very much, Inshira Ado. Ladies and gentlemen, we want to thank each and every one of you for attending this program. Because of COVID, we could not open it up for a lot of people to be in the auditorium. but I can tell you that we had over 100 people on Zoom who followed this event today, and we are grateful to each and every one of them for being part of this event. As Dr. Ali Nachia said, we'll keep it simple, and we advise that our tax regulators would also keep it simple for us. I want to say a big thank you to our panelists. That is Dr. Ali Nachia, Mr. John Amu, and then the former finance minister himself, Honorable Setepe. And then I want to thank our friends, CSOs who were here with us. We are so grateful for each and every one of you. Professor Bopin from the University of Ghana, Franklin Kujo Imani, my good friend and Noy, that was at the time when I was with the National Revenue Enhancement Support Team. He was my boss at that time, who is from the Ministry of Finance. We also have Ben Boache, SEP Executive Director. We have Dr. Charles Adai, who is the Deputy Commissioner of Strategy Research Policy Program from the Ghana Revenue Authority. We have Mr. Douna from the Ghana National Chamber of Commerce. He was here with us. And then my good friend from the Natural Resource Governance Institute, Nafi Chinri, who is the West Africa Regional Manager, Anglophone Office. If I missed your name, please forgive me. It's because I don't have it here, but we are saying a big thank you to each one of you for being here. And then also from our friend from the World Bank, which is Farkan Salim. He is the lead public sector specialist in that office, looking at governance issues. And I'm sure that he's taken a lot with him to help shape our public sector issues that we have in this country. I want to say thank you to all of you, our friends from the media. A big thank you to you. Anytime we have called on you, you have been with us. And then our media partners, multimedia, we are grateful to you. That's Joy FM, Joy Business, My Joy Online, and Joy News. We are thankful to you for partnering with us. Until we meet again, ladies and gentlemen, we say a big thank you to all of you. As we said, we'll put together every issues that have been raised here, the recommendations and everything. We'll share with our partners and also share with the revenue authorities and the ministries to look at it and see how we can help shape the VAT regime in this country. Thank you very much.
Thank you all very much for coming. And if you would like to keep the conversation going, you can interact with PFM Tax Africa by sending an email to info@pfmtaxafrica.com. God bless you all. I'm Inshirado, and I've had a great time learning. God bless you.